Hello and welcome to a brand new edition of Mint's Pivot or Perish webinar series, where we look at the key issues shaping businesses and enterprises as they emerge from the ongoing pandemic. Today, we will discuss India's real estate sector, which has faced its share of ups and downs, and how it has navigated this unprecedented crisis. I am Madhurima Nandi, and we have a panel of experts who, over the next hour, will discuss various aspects of the real estate business, including residential, commercial office, and the emerging co working sector. We have with us today Rajiv Talwar, CEO of DLF Limited and Chairman of Naredco, Abhishek Lodha, MD and CEO of Lodha Group, Jaggi Marwaha, CEO of Prestige Office Ventures, Vivek Singhal, CEO of M3M Group, and Karan Virwani, CEO of WeWork India. Also joining me is my colleague and co-host Tanya Thomas from Mint. I'll start with some fresh data that just came in yesterday from Lysis for us. And it says that in the September quarter, Tier 1 cities recorded a 60% jump in home sales compared to the preceding June quarter. Both Mumbai metropolitan region, which is MMR, and Bangalore reported a similar 60% rise in sales. Fresh launches too recovered by almost 68% in the September quarter, but however, they still are at a 70% lower rate than the corresponding period last year. I'll go straight to Mr. Talwar first. Mr. Talwar, are we seeing, or would it be fair to say that we are seeing early shoots of recovery in the residential sector, even if it's in select markets like Bangalore and Mumbai in particular?
Thank you for this opportunity. In fact, I would first like to suggest that if this is a series called Pivot or Perish, I think let's change it to Pivot and Flourish. Any economy which is hoping to now go from poverty to prosperity, as announced by the Prime Minister in his speech on 15th of August 2019, changed the entire economic and economy narrative of this country. So once you set your sights, I think we're too young a nation to say perish or use the word perish. We have every advantage. We've had some path-breaking reforms in the last 6 years and even before. So there is no reason to say that an economy which is going towards a 5, 10, 15 trillion dollar economy will in any manner not flourish, which includes one of these sectors which is in shortage. We've had a policy of state control, and I'm sure my colleagues here on the panel, they're giants in themselves. I can vouch for Abhishek and his decision-making capacity. I can also vouch for Karan. I mean, that what he's done in terms of WeWork and the recent announcement they've made. M3M and Vivek have gone absolutely spectacular in their launches and in their build-up. Similarly, Jaggi, I'm sure, would be aware that yes, there is no way that we can lose hope. It is true that there have been ups and downs, there have been need for policy tweaks, but the fact was in the first budget of Mr. Jaitley, he introduced the concept of REITs. It took us 3 years to tweak all the corners there, but look at the kind of REITs that we've had. Whether it was the first investment by GIC in 2015 was made for a residential property with us. REITs, private sector REITs have come up in offices with us, with GIC and others recently. It's been a great step forward. There have been various reforms like the GST, and maybe we need to do something over there that yes, how do we keep a tax trail alive? There have been launches. Some people like us did know that if RERA was coming, which is a great step forward, we do need to now make in the initial stages from 2010 to 2017 that have ready-made stock, because that gives the biggest confidence to the home buyer. Today, post-pandemic, post various changes in this nation and the policies, whether it's labor, whether it's farm laws, whether it's Article 370 in Kashmir. There have been such path breaking steps that there is no way to lose hope in this country. We have a shortage of homes. I think the pandemic brought to us the reality that yes, anyone who did not have a pakka roof over their head, if they were living in slums or unauthorized colonies, they migrated back. But the good part is that most of them have come back, hopefully. And we are well back on our way to now have launches and now realize that this is a pyramid. That's all that there is. It's a pyramid which has the largest layer, maybe up to half of it, of 300 to 600 square feet homes, 600 to maybe 2000 in the middle, and there will always be room on the top when an economy flourishes for offices, for homes, any size. The bulk of that will be affordable housing. I'm sure I can vouch for Abhishek's father, Mangal Prabhat ji. He should be called the actual rhinestone cowboy, and maybe now young, Abhishek is taking that place, that every sidewalk in the streets of the Bombay Municipal Corporation and the Sachivalaya would be known to Mangal Prabhat ji. I've walked with him. We've learned so much from him that it is a pleasure to see that Abhishek, who has taken over one of our prized properties, which he took over, and what a great job he's done. He's created skyscrapers over there. I mean, which is almost, if he was allowed, he would have created three Empire State buildings for residential in a 17-acre plot called the Mumbai Textile Mills. And that was the kind of speed which he showed in implementation. Similarly, when it comes to Karan, when it comes to Vivek and M3M and to Jagid, this there is no way that a massive shortage and an economy which is on the trot purely will ever suffer from any lack of opportunity. We do need to tweak rules. We do need to have changes in tax laws somewhere. The Prime Minister himself announced it when we went to before he went to the US last year, that corporate tax would be capped at 25%. New people coming in would be at 17. I think we similarly need to look at direct taxes and even tweak small little things. What are those? Those are things like own as many homes as long as you're reinvesting money from a sold home or an old home. Also allow a much larger amount for the younger generation and maybe some people who are nearing retirement on home loans. Fortunately, the government of India has been following a policy last year. The most, the person who's the most active is the governor RBI, and you are now seeing fruits that tax rates and interest rates are coming down. Not tax rates, sorry, interest rates are coming down. All of us have been beneficiaries of lower tax rates. We do need to now allow, yes, more and more of launches, but within RERA for residential homes, because that is one great law which has said all approvals must be in place, because many people in the past had dropped that habit of getting approvals and making buildings of concrete and cement into before they went and attracted customers. I think that's been taken care of by RERA, and you're now going into new structures. I'm sure steel structures will come into this country, and they're definitely coming into office spaces prior to maybe homes, but homes will also fall away when they go high rise. So I'm quite certain that there is plenty of room for opportunity. There are good signs coming up. The sales wherever they are launched are supporting builders and developers. They need to be sincere, we all need to be sincere, and like any other product, we need to make and start off with maybe 5 crore homes of affordable housing rather than just 1 crore 12 lakhs, which will be achieved, by the way, by the present minister, Mr. Hardeep Puri, 1 year in advance. So, therefore, most, whether it's construction capacity, but most parts of this industry have to look up. They provide a great opportunity for new people to come in, for organized people to come in, structured people to come in, and then live up to their promise that yes, there will be no shortage. People will get homes. I can tell you in a city like Bombay, which is absolutely fantastic. Your slum rehabilitation schemes, if they were made simpler to implement, they make crore-patis out of slum dwellers and they get these homes free. That is the city of Bombay and its enterprise value. So this is what will be replicated, and if there is going to be from a 300 to a 600 million population in cities, there is hope for every super metros, tier 1, 2, 3, 4. There's no way that we can keep India from developing and going well on the path of a 10 to 15 trillion dollar economy. Thank you.
Thanks, Mr. Talwar. Abhishek, I'll go next to you. What is the kind of demand recovery you are seeing in MMR, which is of course your core area of operations, and what do you think are the triggers?
Thank you, Madhurima. Great to be on this panel with all the industry stalwarts led by Rajiv ji. Um, I think it's a very interesting time when the pandemic and the lockdown hit in late March. We were all extremely worried about what the future held for housing and the industry in general. Uh, Today, if I was to tell you frankly, it's been probably the best 3 months that we've seen in the last 5 years. Every month from July onwards, things have gotten better. August, September, and with the festive season now started in October, it seems to be only getting stronger. I think, as Rajiv ji mentioned, the lower interest rates are definitely helping. But I think more importantly, you will note that there has been an upsurge in sentiment towards housing across the globe. The US is having its strongest ever housing sales. You're getting very strong housing numbers out of China. The UK housing prices are at an all time high. And similarly, in Indian cities, definitely in Mumbai, and I also understand in Bangalore, you're seeing a lot of demand for good quality housing, especially that one that is ready. People have adjusted their mind state towards homes. They no longer think about it as only being comparable to some equity investment, because having stayed at home for a few months, you've realized that you can't go and stay inside your mutual fund portfolio. A home is a lot more than just merely an investment. And a home is the only thing which is not just an investment, but also one which gives you lots of joy and yet appreciates in value. If you buy a great car, you buy a BMW, 5 years later, you sell it for 25% of what you bought it for. You buy a high quality home, 5 years later, not only have you enjoyed it, you sell it for 125% of what you bought it for. How wonderful! You can enjoy and yet it grows in value. And I think people have gotten that. People with work from home and study from home want bigger homes now, at least one extra room. People want more outdoor space in their house. If they can afford to buy land, they want the land. Else they want a terrace, or they want a garden, or they want a balcony. And they want to live in developments which are well managed and have lots of outdoor spaces. With these trends in place, we're seeing that housing demand is very strong. If things go well this month in October, we might do as much as 1,000 crore of sales in 1 month, and I think that's really just the start. Everything is cyclical. Real estate is definitely a cyclical industry. Housing has gone through, I would say, more than 4, almost 5 tough years because of oversupply. I'm not a proponent which says that there should be lots and lots of new starts and new launches, because ultimately the middle class of India and the middle class of any country, whether it's the US, China, or etc., have gotten wealthy when housing prices have moved up in a reasonable fashion. 70-80% of middle class wealth is held in housing. And if those housing prices appreciate, confidence grows, consumption in the economy grows, and overall there is a feel good factor. So I think for the long term continued growth of the economy, if India is to go back to being the 7-8% real growth numbers that we were seeing 2 or 3 years ago, and if the Prime Minister's vision of becoming a $5 trillion economy soon is to be achieved, the housing sector is going to play a key role. I am very hopeful that with a continued reduction in interest rates, which is very important in our country, our mortgage rates are still, they become quite low, below 7% for the first time, but still there is room to go. This is a fantastic time for people to be buying high quality property, especially ready property. We are seeing very good demand for that. And I'm hopeful that as that demand comes in, more and more employment creation will happen, not just on sites in construction and facilities management, but in the entire supply chain, because that real estate provides a demand for almost 250 other industries. So for the overall economic revival of this country, the signs on housing are looking quite good. And with the support of the RBI and the government, we feel very good that while we've had 4 to 5 tough years in housing, the next 3 to 5 years will become better, driven by the fact that people are now willing to buy only from certain players, especially under construction. They want to buy from the best, where the credibility is very high. And in that sense, the market is becoming more disciplined, supply is becoming more controlled, risk is being reduced, because people know when they buy under construction, they are going to get a delivery on time, high quality. And all of these are signs of a maturing market, which will create value for all its stakeholders.
Sure. Vivek, I wanted to ask you, NCR has been, over the last 5 years, one of the most impacted property markets in the country. How has M3M, coped in recent months? Because, I mean, this was a crisis for most businesses. So did you launch projects? Did you focus on execution? And are you kind of seeing buyers coming back slowly?
So, Madhurima, thank you for the question. So the point is, if I really look at how the things have evolved in last couple of years or last couple of months, specifically, I think the things started changing when the RERA was implemented. Because that was the biggest cornerstone in terms of how the things will evolve over a period of next decade or so in terms of the housing. Because prior to RERA, I think there was no obligation on the developers to deliver on time, deliver a quality product. So there were so many challenges which the customer was facing. So, in nutshell, the point I'm saying is this is one of those very few industries wherein you pay first and then you get your product. I'm saying if you want to buy a BMW, I'm saying the point is that you'll pay it across the table and then you'll get the car. So there is no lead time. The biggest challenge which our industry has always faced is that there is a huge lead time between when a customer makes a payment and when he gets his product, especially for the under construction project. So the point is that the credibility is the key. So as Abhishek is mentioning, the credibility is the key, and the people who had the credibility has flourished, and the people who didn't have the credibility have vanished, and that's the hard reality of the real estate today. So the point is, moving forward, I see further consolidation. I'm being honest and upfront. I don't want to paint a rosy picture, but the point is that there is a further room for the consolidation because there are so many projects day in day out. I also look at what is available for the acquisition day in day out, and today I'm saying I'm getting things at a rate which is half of what it used to be available. I'm saying typically when you talk about land, when you talk about half completed project, the banks are in distress, where they are funded. I'm saying so there is so much of distress which is available in the market, which gives you the opportunity. Now, coming back to the customer point of view, I'm saying the moment we start working with the perception that the market is gonna be bad, the COVID has hit, because of the COVID there is a further demand is gonna go down. I'm saying it's a perception. The point is the cost of development has not gone down. Cost of development has gone up actually, because the labor is not that really readily available today. I'm saying the cost has gone up. Similarly, the taxes have gone up. I'm saying we may talk about GST come down. I'm saying GST, but the point is that that 5% scheme which came about a year ago, that resulted into another increase in the cost of the development. So the point is that whatever is readily available today is the key for the buyer, and that is what has helped us as an organization. So I should say that between the month of August, September, and October, I think we have done a sale of good 2,000 crores across all our projects. So which is again a remarkable number for an organization like ours, because which is almost about 40% of our sales, which we do annually. So the point is that that is where the key lies. The second thing, which in my view is very different today in comparison to what used to be 6 years ago or 7 years ago. 7 years ago, everybody was trying to buy a very aspirational home. So today people are looking for an efficient home. They are looking for the buildings which are more usable rather than trying to buy a very highly aspirational home. So the point is that there are two clear segments now in the housing, especially for a market in which we operate. So there is a segment which is downwards of 2 crores, and there is a segment which is upwards of 5 crores. So this there used to be a very big segment earlier, which was between 2 crores to 5 crores. That segment is not performing, whereas the segment upwards of 5 crores is performing, and the segment which is below 2 crores is very well performing. So if I were to do a split of the sales which we are getting today, I'm saying, I would get about 50% of my sale from downwards of 2 crores, and about 40% of my sale upwards of 5 crores. So that is very interesting, because what it shows is that in last couple of months or last 6 months, the people who are under distress, or people are the middle managers, not the people at the lower level, or the people who are looking for a luxury lifestyle. So that's a very interesting thing. But in terms of performance, I think what COVID did was it only created a pent up demand. And at the end of the day, if somebody wants to buy, they have to buy sooner or later. I think the moment the perception changes that the price is not going to come down, then the people again go back and they start buying. Because so many times I'm saying, whether we talk about 2013, whether we talk about 2012, I'm saying those are the years when the prices were rising year on year, like 25%, 30%. The people were just buying it because they thought that it's a good inflation hedge. Fine, it may not be a great inflation hedge today, but still it is a product which will appreciate over a period of time. That is what we need to understand, and that's an asset which you can always relish, and you can enjoy. And so, for example, I'm saying if I'm living in a villa and I want to buy a land next to it, rather I would buy a land at a higher value next to that, because I'll be able to enjoy it rather than buying a investment or a plot somewhere else. So that's the whole concept which has got changed in last couple of years. And I think overall I don't see much of a challenge, but as a playbook from our point of view, what we are looking at is that we will increase our portfolio moving forward in the segment which is downwards of about 1.5 crore. So what was never available in Gurgaon, I'm saying what was never available in Gurgaon is that's the segment which will be embarking majorly on. So that's what we are thinking of. If you so that's I hope that answers.
Yeah, sure.
Jaggi, if we can come to you now about the commercial real estate space. We've seen since the lockdown started, we've seen two large commercial deals close with Prestige and RMZ, and at the same time, tenants are renegotiating leases. Tech companies are going on extended work from home. So, what do we make of the commercial real estate space? What is your sentiment? What has the experience been during the lockdown, and when do you think things will normalize, if there is going to be a different kind of normal?
So I'll take a cue from both Abhishek and Rajiv ji, the way they spoke about the buoyancy in the market. And it's not that traditionally developers always seem to be the positive side, but I've just come from the developer world from the other side. But all I
Right.
can say is that the office market is very robust in spite of what we are seeing right now. Last year was a phenomenal year in commercial real estate. In fact, the last uh, 7 years, India has been doing anywhere average between 30 to 35 million square feet of space take up year on year. Last year was a phenomenal year because it was almost at about 46 million square feet of space, which got. So last year is not a benchmark to what we are seeing this year. But having said that, I would say commercial reality is right now a big shining star, primarily because the growth story of India, like Rajiv said, is very intact. India is still the cheapest outsourcing destination in the world. Global costs of outsourcing is pretty low. The highest skilled labor with regard to the arbitrage on cost, number one. Number two, a huge population of about upwards of about 2.5 million people who are STEM graduates, who keep pumping in knowledge capital into the country, which boosts the IT demand in this country. So coupled with both on one side, the young population which is ready to grow, and more importantly, the investor base that has created a lot of demand thanks to uh, real estate developers also upping the benchmark in terms of quality, be it all Lodha, the way they build, DLF, uh, RMZ, Prestige, Embassy, all these are top of the bracket today in terms of the quality of real estate that is coming in. That is giving a lot of confidence to the global investor community, which is looking at not only the quality of real estate, the scale matters, and more importantly, governance matters. And I think most of these companies today have created a niche for themselves to such an extent that uh, the big private equity players, 5 years ago, nobody would have ever imagined that uh, a Canadian private equity fund would be one of the largest owners of real estate in India.
Right.
So things have evolved quite a bit in the last 5 years, and I have no reason to believe that this growth story of commercial real estate, uh, keeping in mind about a 35 million square feet market, which is a very sizable quantum of space that gets leased year on year. And one more important reason is why we're not facing too much of a downturn in this pandemic is because last year's the vacancy levels when we closed last year at 46 million square feet was under single digits in most cities. So the real pressure on offtake of space was never there. Even a market like Mumbai, where Lodha is a dominant player along with TRC and other players there, it's highly an underserved market actually. So there's a huge opportunity that many quality players can actually take this period to reboot, reconsolidate, reinvent, and more importantly, rejig their entire portfolio to make it much more attractive.
So, does the presence of international investors, foreign investors, is that giving you the luxury of tiding over a slightly rocky period, to, like you said, to
No,
reboot, to
no, no,
reevaluate your
no,
portfolio?
no. So let's get things into perspective. India has a 600 million square feet office market. 300 million is still readable. So it's a very large quantum of readable space that is still available in the market. Out of that, you only have two REITs right now, and like Rajiv ji has mentioned, the REITs have become such an attractive proposition that now with the third REIT coming in any time around the corner, it's going to become a very sustainable play, and you will see that the big boys are going to draw out much more out of this period than anybody else. 30% of the real estate space is controlled by 10 to 11 players in this country. So you take 600 million square feet, 200 million square feet is controlled by a few of the people sitting in this room. And that is a sizable story. And that story
Right.
is only because you are governing your organizations correctly. You're respecting institutional money, which is very important. And more importantly, you are becoming client friendly and tenant friendly to have mark to market rentals, keep in the levels, even keeping in mind that global office, everybody says the moment you cross $1 and above a square foot a month, you won't be in business. In most cities today, rents are upwards of $1.20 or $1.30, and still the vacancy levels are in single digits. So, irrespective of what happens, the private equity money, the attraction for them with the top 10, 15 players, the romancing, and more importantly, the long fostering of partnerships will continue. Having said that, the only challenge that we see right now, and it's important not to just paint a rosy picture, is the quality of uh, money flowing or the quantity of money flowing in terms of the liquidity that is in the market available today, both from residential players as well as office players. That is a big concern that we need to rectify and get that thing going. I think Rajiv and Abhishek will agree to that.
Point taken. Jagdeep, Karan, coming to you. What has been your experience of the lockdown, post-lockdown? Are you seeing people come back? Is demand sort of picking up again for WeWork?
Karan's looking
So,
fitter after the lockdown.
I've been spending. uh, so it's been really interesting. I think what we've seen, and I think what everyone should realize is that the pandemic has changed a lot of things. And mostly changed the mindset of business owners or office tenants on what the office or what the workforce sort of should be like. And it's only actually increased the emphasis on flexibility and the need for flexibility in the way that your workforce sort of functions. And that's the thing that we are seeing now starting to pick up with a lot of large enterprises who originally had this notion of a centralized office, or a central headquarters where all of their employees needed to come to, being completely changed, in see and now sort of exploring more flexible sort of working models for all of the employees, right? There's no doubt that remote working, I won't say work from home, but remote working is definitely accelerated, and a lot of companies have seen the advantage of it. I think a lot of companies have realized that holding a big chunk of fixed cost when it comes to my office or my real estate is not as advantageous as I thought. But making that a variable cost works better in situations like this when the market does go down. And that's the kind of demand that we're seeing now coming back slowly as things have started opening up, where over this year, in a normal year, we last year in 2019 and 2018, we sold almost 40,000 desks in the year, which is close to a little over about 2 million square foot of leasing, each year. And this year, we are closing this year close to about 25,000, desks of leasing, even through this pandemic year. So you're seeing a lot of large occupiers actually looking at flexible models, and flexible workspaces, because one, obviously it offers the flexibility. Second, you're changing a fixed cost into a variable cost. And thirdly, I do not want to take the headache of operating my space anymore, of keeping it clean, making sure that it's safe for my employees when it's not actually my core business. And that's why they're coming to us, and organized players like us, seeing a big uptick in demand from a lot of large enterprises, in looking at these flexible models. We've also actually taken this time to pivot, and launch something called on demand or on all access, which will completely sort of change the way even flexible workspaces, of how flexible they can be, where you could go on an app and actually book, come into a WeWork space for as much as half an hour or an hour, or a day, rather than even holding it for a month. And what this does is that all these remote workers or people working from home, or now outside of the office, while they're in these smaller homes where the infrastructure is not good, high speed internet isn't great, you have joint families, and a lot of noise around it, can actually escape and come and use an office just for half an hour, 2 hours, to actually hold a meeting, or even conduct an interview, or whatever is sort of required. We've also launched something called All Access, which allows companies, large organizations that have a spread out workforce, to not only use an office space, but also use it as a co-working space, and
Karan, I think we've lost you. Okay, before he comes back, Jaggi, just based on the thread of thought that Karan was following, uh, are we looking at a medium-term change where co-working might cannibalize the commercial real estate space a little bit? Karan, you're back. Sorry,
sorry,
you can
I lost
continue.
you.
I have a yeah. Please continue.
So I was just saying that that's the kind of change that you're seeing in behaviors of companies now, and how they look at their workforce. And we see that flexible office providers are definitely going to benefit, as people start coming back to the office.
Okay, so I was before you came back, Karan. My question was whether over the medium term, based on what you're saying, whether we're going to see co-working to a certain extent maybe cannibalize long-term leases on for commercial office space.
I don't think we always look at ourselves as partners to our landlords, and I think that with having a chunk of your portfolio that is flexible, you're also able to offer your clients that are part of your portfolio something completely different, or what they actually need for their business, right? And so we actually want to partner with landlords a lot more even during this time, because even landlords have started to realize how relevant the need for flexibility is for their tenants. And when you need smaller incubation spaces or even space for growth before moving into a consolidated space, right now that's a lot of the demand that we're seeing is these companies who have campuses or offices coming up in the next 2 or 3 years, needing some immediate space right now, and don't want to sign a long-term lease in that period. And that's where we can actually be a partner to a lot of landlords, and this is where we're seeing sort of more management kind of contracts, more operator type of contracts coming up, and even landlords now adopting revenue share model. We have a revenue share model running successfully with the embassy REIT with a building in Manyata. And even before opening it, we're opening it on the 15th of this month. It's already 80% leased, with a large bank for the next 4 years. So, the office landlord gets to see the advantage of that.
Mr. Talwar, I'll go next with you. I wanted to ask you, given the kind of crisis that we have seen this year, I mean, of course, larger players like a DLF or a Lodha, will tide through the crisis in their own way and clearly have an advantage. But do you think funding issues and this prolonged liquidity crunch will lead to some kind of, consolidation in the sector? And also, do you think that opens up, opportunities for a company like DLF?
I think we are quite happy being where we are, and hopefully we will not be usurping anyone else's portfolio. That's one. But yes, the crisis which we've seen this year is, of course, unprecedented. It's quite different from what it was earlier. Earlier, there was a confidence crisis, if you recall, that existed since almost 2012-13. That lots of players perhaps were not so accountable and also not really transparent. The compliance level needed to be upgraded. So a lot of us learned, and we actually perhaps outshone, in local markets, many people who were, by being just compliant with all rules and regulations, also being transparent and accountable for every penny taken by an investor or by a buyer and delivering there. So I think that's something which has stood us in good stead over the years. But coming into the future, I still hold that, as everyone is saying, we have to get out of what was many decades ago the Hindu rate of growth and something like shortages. We have 1/6 of the world population. We do have an opportunity right now to actually flower in that. We need to set our policies right. We need to tweak minor, incompatible policies and make them you buyer friendly, make them industry friendly, and then actually reinvent the cycle to the extent that every section of society can be an engine for growth. It's not only it's the bottom of the pyramid and then the middle of the pyramid, and later on what I think Vivek called aspirational. All these markets will flourish. You just have to pivot around your own policies, your own commitments, meeting the commitments, now changing structures and technology. I think many in this industry were traditionally technology bound for a long time. Those are going to change. Artificial intelligence. I mean, we have a huge young population which is getting smarter by the day. There's no reason why upcoming developments will not be much more smarter, whether it is in the use of your optical fiber cables, whether it's in the use of computers, whether it's in the information technology. All these will come in as a part. Water recycling is a big thing which will happen. When you go in and settle down in high rises, water recycling will become a part. Then will there be low rises which are now 10 floors. So, cheaper technology. How will land change? How will land pricing change? All these lower mortgage rates are required, as Abhishek very rightly said, that mortgage rates in India are very high. When the kind of returns which were expected by private equity players were very high, I think the volume is the big game changer in India. You can absorb any kind of money. You can give a very good return on that simply for the fact that you have to meet so much of demand. And once this cycle starts, even if it is housing for all and affordable housing from there upwards, believe me, the cycle is going to turn so fast that what Jaggi said, that did you ever imagine that a Canadian pension fund would be one of the larger investors over here? I think that market itself is changing. The Indian economy itself is changing. There's a lot of room for growth, and there are a lot of new avenues which are coming up. We all have to start working doubly hard as we did before. We've got to be compliant to rules and regulations. We've got to be extremely transparent. And I hope that whether it is commercial leasing, where input tax credit must come in, or whether it is even fractional ownership, which will come into residential spaces. Rental housing is something which, after many, many years of reminding the government has accepted this. There's a rental policy. I think we need to set those parts of the taxation laws also straight. Make it worthwhile for Indian buyers and Indian population to invest into multiple homes, give them a return which gives them a positive return of 2 to 4%, and it can be done very easily. There's a maintenance provision of 30% given for homes on rent. Why are we not increasing it to 50%? You immediately give a good return to the investor and increase the volume of number of homes available on a rented basis. I always tell everyone who's young, like many of you here, and especially ladies in the media world or people who are taking up jobs anew, invest in your first home as small as it can be. Get married, keep up your EMI payments, tell the husband to contribute to household expenses. Anything going wrong, you can either change from one town to another into a rented home, put your place on rent. If the return is good, it will be a very good investment. Anything going wrong, tell the man to look out for a new house. Nobody should now have the problem of going back to a parental house because the house was invested into a man's name. It should be a gender equal opportunity, much more for women than for any man. Provide security over there. I think we are actually looking at a new paradigm in India. The entire narrative is changing. When you look at an economy, the kind of consumption there will be, the kind of equipment and FMCG goods there will be, that is an economy which is a hugely different economy. We've got, whether it's Western Europe, whether it's the US and North America, whether it is China next door, whether it is Southeast Asia, those economies are changing. Unfortunately, I think what we keep on discussing and we keep on saying that yes, is it happening? And we'll have plenty of statistics saying, no, it's not going through, it's not happening. But the truth is that once the nation makes up its mind, we've had 30 years of growth from a $250 billion economy to a $2.7 trillion economy. That's 10 to 11 times. There's no reason why we cannot achieve a multiplier of 5 from the current size. We can do that. It's just that, yes, not only all of us who are in this game itself, many of you who are in the media world, many of you who are in the bureaucracy, and policymakers who are in the political executive or in the judiciary will have to set a target that yes, we need to provide ASAP a much higher and a much better standard of living, much better places to stay. And if you're going to make ports, airports, cities, Sagarmala, Bharatmala, all these projects come alive, I think the kind of infrastructure that we need to build, the kind of investment we need to build, there'll be a long-term opportunity for this country to have lower interest rates, huge volumes of investment, even coming from abroad. After all, commercial real estate has seen the largest FDI inflow in the last 2 or 3 years. There's no reason why anyone needs to be dismal and not bet on the future. Most of all, lower taxation rates. If the Prime Minister could do it in corporate tax, there's no reason why it cannot happen in direct taxation, why it cannot happen in even GST and indirect taxes. It should happen, remove exemptions, lower the rates, have much higher collections. You need to have a tax portfolio and a tax collection of something like 40 lakh crores within the next few years, because you're hoping for a $5 trillion economy, but sooner than later into an 80 lakh crore. So this is something which we are now looking at, a $1 trillion tax collection. How soon will it happen? All of us need to be on a common page, because you won't find any of this in this room ever backing out of it. It spells prosperity, but it also spells prosperity for that 1.3 billion that we're talking of. Food patterns, consumption patterns will change. Artificial intelligence will lead the way. IT will change. So this is an opportunity for everyone. I don't think we need to despair at all. We are still discussing green shoots. My God, there should be so much that you should be saying, how do I tackle this forest? That yes, there are only green shoots coming up. And let's provide good technology into even irrigation of those green shoots. Believe me, this country will rise. There's no way that you can keep it back.
I'll go to Abhishek next. Abhishek, what is the kind of consolidation that you think is happening? What are the reasons? Do you think that funding is a huge issue right now? Do you think liquidity crunch will make it difficult for some developers, particularly in difficult markets like NCR and Mumbai, to survive this crisis and the ongoing slowdown in the sector?
Madhurima, I would like to think of it from the perspective of the consumer rather than of the developer. Ultimately, a consumer puts in his hard-earned money, almost 60-70% of his wealth, and the biggest purchase of his life when he's buying a home, and there should be no uncertainty. This discussion about whether there will be a funding shortage and whether the developer will be able to complete the project is just unacceptable. I think where the industry is headed now is there are people who are land experts. They will create the land, they will get the approvals potentially, and then there are the development experts, companies who know how to build the best quality of housing at reasonable prices, companies which know how to make sure their finances are in order, companies which have a track record of delivering good quality and on time, and companies which use information technology and other tools available to best service consumers. I think consumers are getting that across other industries, and they're now wanting it and are also getting it in real estate. So coming to that perspective, where will the consumer buy? The consumer will buy where he has complete comfort, track record, as well as a knowledge that the project is in, not only has all the approvals, which is what RERA ensures, but I think that's only the starting point. But more importantly, the project will be completed on time because the developer has the resources and the intent. Now, when you look at the number of developers who enjoy that reputation, the number is very small in every city. I can tell you with some confidence in Mumbai that it's in single digits. And I think the number is similarly in single digits across all the major metros of the country. What does that mean in terms of consolidation? It means that demand is going to go to those projects by these developers. Automatically, the other projects where developers are not of that same level of credibility will not get pre-sales during under construction phase, and the funding will not come. See, a funder gives money to make a return and get his money back. He's not putting out money to speculate and then hope that things will go right. So I think it's very reasonable to expect that funders will limit their funding to those who are credible, which in turn means that only the credible, financially stable projects will get funding, and those will be the ones which will be available for selling in the market. And the buyer, most importantly, has already started buying over there. See, our market share in MMR, and MMR is a very, very competitive market. Our market share in MMR has gone up from about 10-11% 3 years ago to now somewhere between 15 to 18%, depending on what number you look at. And I think 15 to 18% is not good enough, because ultimately, there's no other industry where the industry leader should only have 15% market share. So the consolidation is inevitable. But I think, we, at least as a strategy, are very happy stepping into projects which need to be completed, because we are concerned about the consumer and the industry. Stuck projects which are half built and the crane has been hanging for 7 years, do no good to the reputation of the industry, to the sites of the city, or to the buyer. So we as a company have taken a strategy that we are happy to partner with other developers, landowners, as well as with banks and lenders, to make sure that projects can go towards completion. And we see that as an important part of our growth story going forward, not just in MMR, but in Pune and other cities too.
Jackie, I'll on the same note, I wanted to ask you that India's commercial office sector has already seen a considerable amount of consolidation over the last few years, and we've seen these 5, 6, 7 large players emerging, right, backed by again large institutional investors. So, as global investor interest sort of peaks in the office sector, do you think that even within the commercial office space, there is scope for further consolidation, and only developers who are backed by, again, institutional funds will survive?
Not necessarily. I think gone are those days in India that you could call one pan-India developer who controls the entire Indian market. That's not the story anymore. I think there are niche players in every market, and more importantly, every developer today, especially the commercial side, are growing their entire asset classes in certain micro markets within the cities that they dominate. But having said that, there are many players who are also looking at different geographies. We for ourselves, we definitely are looking at coming into Mumbai in a big way, and you'll hear about it much more in the next couple of quarters. But having said that, I think it's a level playing field for anybody to enter any market. And when you have good quality institution backing you, with the market intelligence that it deserves, commercial real estate, of course, a different game. And more importantly, if you have the wherewithal to environment manage, which many of us do a great job at, and many of us do a very shoddy job at, because what works in Thane cannot work in Bangalore. What works in old OMR Road in Chennai doesn't work in Gurgaon. So I think there's plenty of opportunity for everybody. Having said that, you will see new players coming in. You will see quality. Even you may see institutional backed international developers coming back to India, because the story is very, very, very robust, very sustainable, and more importantly, huge opportunity that exists in the commercial markets.
Sure. Karan, I wanted to ask you the same thing. I mean, the co-working sector in India in the last, 2 to 3, 4 years, we saw sort of hundreds of operators, with 1 or 2 or 3 assets
Yeah.
emerging. And the kind of crisis that we've seen in the last 6 to 8 months, we've also seen WeWork's competitor in India being bought out by an investor, right? The whole
Yeah.
business. So, I mean, do you think those operators which are backed by institutional investors or are, well funded,
Yeah.
are the only ones that will survive? Because it's not an easy business, clearly.
Yeah, look, it's definitely been tough few months, even actually a tough year for co-working players, even through the NBFC crisis, or tough 18 months. And I think you have seen a lot of the operators who have been delivering quality product, quality space, and also have quality tenants with them, actually drawing institutional investment over the last few months, and I do envision those are the guys, that will continue to stay. I think even with us raising this 100 million over the last few months gave us, huge war chest to sustain through this entire period and be, comfortable and be competitive and being able to grab deals wherever required. But honestly, for the smaller operators, it is a very challenging time, and a lot of them will have to, unfortunately, shut shop. And I don't know about real consolidation, because I think there's only a few handful of portfolios, or maybe two or three or four operators in the entire country that you could potentially even look for in terms of a sizable consolidation. I think the real thing you're going to want to see is how many of the operators actually are able to sort of sustain through this period and make it out on the other side. And I think that the ones that do are going to benefit hugely, because the boom in flexible office is coming in a massive, massive way as soon as things open up. And we're starting to see, huge indicators of that all over the world. I mean, if you look at China and South Korea, where we're back to 100%. And even in India, we're now speaking to companies, traditional companies that have been around for 50, 60 years, even 100 years. We signed with a huge law firm, actually now looking at a flexible office space provider as their way of where their office needs to be. So it is tough for some time, but everyone who's able to manage their operation, cut a lot of the cost, and keep as many of their tenants as possible through this time, will benefit hugely once coming out of it.
And Vivek, coming to you, if we look at the Bangalore and MMR residential markets, NCR and Gurgaon have been impacted quite a lot in the last few years. So, what is your experience now? Do you see a comeback? Or do you see buyers returning? And are there, is it difficult for a home buyer to get a loan now? And we know interest rates have come down, but home buyers often complain about banks not transmitting the interest rate cuts. So, what are you making? How are
So
you reading
I
this?
think first we should break this question into a couple of parts. I think first is there a demand now? Yes, there is a demand. I think as we've been all discussing through this panel, I think the demand is for the credibility today. I think it's all about brand. I'm saying if you can write on the board and that my brand is gonna be there for next 100 years, I think people will trust you, and that is how you'll have to behave yourself. The point is that people who have a credibility, the customer is willing to come and willing to invest and wait for the property. So that is the first point. The second is, I think if we were to talk about the funding, if I were to really look at my books in last 5 years, I am having the cheapest cost of capital today. In last, I should say, 1 year, my cost of capital has actually gone down. So the point is that again, this with respect to the funding, also the challenge is the same. I'm saying what was not fundable earlier, I'm saying is fundable today, or what was easily available as a capital to a lot of people is not available today. So the point is that I think it's all about the merit in with which we all are working. That is what is going to decide, how easily the capital is going to be available today. So that is the second point. Third is, if we were to really look at from the consolidation point of view, as I said to you earlier, I think there is a fine balance between the agility and the consolidation. So the point I'm saying is that when you are small, when the organizations are small, they are agile, they are able to change their business plans, they are able to change their business model very quickly and spontaneously, whereas the consolidation does away with that. But the point is that their inertia also brings a lot of value both for the customers as well as for the investors. So the point I'm trying to drive over here is that today there is an opportunity for consolidation, because let's face the fact, lots and lots of NBFCs, lots of financial institutions are stuck. Their money is stuck with so many of their borrowers. So there is always an opportunity. The question is that it's sometimes we say it in our parlance, wherein just to take out somebody from the mud. When you step in to push somebody out of the mud, you should not get in there. The point is that there is a way to make it work, and I think it requires a lot of progress and it requires a lot of diligence today in comparison to the decision which we're taking. I'm saying I can also look back what decisions which we took 10 years ago. Maybe some of those are not right because there was a frenzy in the market. Today, the good thing is that anybody who's gone through the last two cycles, they understand what it takes to take a good decision. I think that's the hard reality. So whether we talk about funding challenges, whether we talk about customer confidence, I think it's all a function of what brand you're carrying and how you have delivered in the past 4 5 years. I think that is where the whole reflection is coming today. So that's
I
my
think we
view.
are running out of time. I'm going to ask one last question to Abhishek, something which I think everyone wants to know these days, and that is, are prices expected to go down further? There has been a lot of pricing pressure on developers, I assume, and prices have been stagnant for a while. But Abhishek, and given that you have projects across the price spectrum, do you foresee prices coming down, or are we going to see prices gradually inching up?
If you want a one-word answer, Madhurima, the answer is no. I think, as I mentioned, today demand has gotten ahead of supply, and that's the natural equilibrium of the market. If for 5 years supply was ahead of demand and prices were sort of moving downwards or sideways, we are now moving in the other direction. The fact of the matter is, as an economy, there is going to be a lot of monetary easing to support the economy over the next few quarters, potentially some fiscal support too. And with that kind of money injected into the economy, real assets, hard assets like real estate, especially housing, are going to move up in value. More importantly, the supply is going to be much more constrained. And therefore, today, buying product, especially ready product, is something which is going to be very rare. And when something is limited in supply or rare, prices move upwards. If you ask me where prices will be 12 or 24 months from today, I can tell you with confidence that for the 90% of transactions, they will be significantly higher. When I say significantly, anywhere from 5 to 15% higher than they are today over a 24-month period. Will you hear the story of the distressed seller who has to sell cheaply? Yes, you will hear that. Will you hear the story of a distressed developer who wants to sell cheaply? You will hear that, but nobody will buy from that distressed developer because nobody wants to put their money into a half-baked building which is never going to get completed. So the fact of the matter is the market is moving towards maturity. The market is moving towards quality and reliability. And with all those things, values will move up, which I think is the single best thing that can happen to the Indian economy. Because if all of us have our housing prices modestly move upwards year on year, it provides a level of confidence because this is the single biggest saving that we have. So I feel pretty good about the fact that the market has seen its bottom. We are past our bottom. You can only see the bottom when you're past it. And I think we are now at a stage where prices will gradually tick upwards, especially if the product is ready or close to ready.
Sure. I want to thank everyone for your time and for sharing your thoughts and perspective with us. Please stay safe and see you soon.
Thank you. Thank
Thank
you all.
you.
Thank you.
Thanks.
Thank you.